Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head financial analyst here. Jumping into the charts on this February 8th, lots to discuss in today's analysis. We're going to be discussing in the first couple minutes here regarding some of the important data that's coming out tomorrow, the overall macro landscape. We'll also be discussing the S&P 500. There was an important sell signal as well that came in on the markets that I want to bring to your attention. It is a massive, massive signal that the market is actually two massive signals that the market is giving us in that we need to be aware of as market participants. And these are critical signals that I will bring to your attention at some point in this video. Now, in terms of what we can expect tomorrow at 8:30, we have the initial job loss claim. So that's going to be market moving. We saw the jobs data, the employment data come in way hotter last week, which is what inevitably spiked the 2-year yield. Let me just pull up the 2-year yield here. So basically, this big spike in the 2-year yield, which was over here, this is on the hot jobs number where we got over 500,000 jobs. Now we have more employment data tomorrow, which could also spike yields more if the number comes in better than expected. Basically, the market consensus is about 190,000 jobs. If that comes in less and that it shows that the job market is still more resilient, you're going to see yields move up and likely continue to confirm this breakout trend. Now, if it comes in worse than expected, then that means that yields can soften up a bit and the banks can be a little less aggressive. So that data is going to be very dependent on which trend the markets continue for tomorrow. My overall thesis is still down, but it's really going to be data dependent. And based off of this potential breakout and what the dollar market is signaling, I still think that it's likely that we see the yield spike. Now, jumping into the S&P 500, obviously at 8:30, we'll be aware of that data that comes out. We will be on the live stream, so definitely tune in for how we're trading and what we're seeing. The S&P 500 had an inside day, seeing some substantial selling down over 1%. The Nasdaq was down just under 2% on the session, closing down about 1.78%. And then in terms of the IWM, that was also down on the session, which actually closed down about 1.46. So tech got hit the hardest. And what's really telling and important about tech, and I'll bring to your attention in this video once we go through the SPY, is basically this day is still technically holding bullish alignment. The level that the bulls want to hold, if you're bullish on this market, is this pivot over here. You can see you already came down on this candle and hit that pivot level. You do not want to lose this pivot. As long as you stay inside of this green bar and consolidate in a sideways range, this market could still move up. Now, my overall thesis is that you are starting to make a series of lower highs in the trend, which does signify a potential downtrend starting. And notice this crazy movement from Powell. This is where our pop, this is where our drop. Markets ended up rallying, put this beautiful topping tail in on volume, and the market's just trended ever since. And notice how on the hourly basis, you actually could not close and confirm above this potential reversal. So we're still in this reversal, and it likely means we're still going to test the low range of this candle. As you can see, we did bounce off of it here, but the markets are in a short-term little downtrend. Even though on the daily they are in an uptrend, they still are technically overbought, but nothing really wrong with this potential pattern. What you actually want to see is potentially downward consolidation. Now, obviously we are tagging multiple resistance in an extended move, so it does continue to favor softening of the S&P 500 prices. Earnings are really going to be telling tomorrow. We have a whole host of earnings. You have ABBV, Pepsi, AZN, Philip Morris in the morning, SPGI, PayPal, Duke, Brookfield. You have trillions and trillions of dollars tomorrow reporting, and I do think right at the opening you get over like 1.5 trillion. So there's going to be market moving events. Definitely will be volatile tomorrow. And if you throw in a hotter than expected job number, then that could also increase the volatility. And maybe that's what the market is expecting. You know, we saw an uptick in volatility today, obviously with the downside. The VIX finished up 5.31%, which is honestly great for our UVXY. But the VIX is still holding this massive trend. And let me just put on this trend line here that we touched base on in our videos. You're still holding this reversal signal off of that level, and you're actually putting in potential short-term bullish consolidation. So you're still stuck in some heavy downtrends here. The VIX has a lot of work to do, but potentially the VIX is showing early warning signs of increased volatility. If the markets dump on that hotter than expected job numbers and potentially weak earnings from the massive companies that are reporting, then we could see the VIX continue to climb even more. Looking at the DXY is just still holding bullish consolidation. Notice how it's consolidating right under the 50 daily moving average. You did not get a clear rejection off of that level. So basically the bears would have wanted to see the dollar fall right as it hit that resistance, but you're actually maintaining consolidation inside of your initial first green bar that attacked that moving average. You've attacked it once, you pierced it on this candle, closed back below, and now you're brushing and bumping up on it. So the dollar is looking primed and poised to consolidate maybe a little bit more and potentially break out to the upside. Again, it's going to be data dependent on what that initial payrolls number comes out, but certainly looking very strong in the near term. Now, I'm going to touch base on the important sell signals that I think the market gave us today. First one, Microsoft. And we called this in our live stream. I would advise you to watch our at TC Live in the mornings because we actually day traded the short right at the highs and made a terrific profit. We're also swing trading Microsoft short and added over 270, 240 to our short. So, or 274 something to our short, but it was a beautiful technical level that we came up into. And I'm going to show you why it hit this level and reversed. And honestly, this is just how the markets go. We actually said in our live stream this morning that we likely were going to put in the top today on the back of Microsoft's huge announcement, AI announcement, Chat GPT kind of style announcement, integrating with their Bing search engine, because it was most likely going to be buy the rumor, sell the news type of event. And what we saw, let's just go intraday just to show you. Basically, on the news announcement, Microsoft gapped up in the pre-market. And we started accumulating a short, building a short. We issued an alert to our swing trade members on our live day trade stream. We also started putting this on the radar of all of our viewers. And we actually shorted ourselves at the highs here and made a beautiful profit. But the fact that you gapped up on that news and reversed and went negative, you were up over 3% on the second largest company in the world. We're talking it was over 2 trillion at the high here. And now with this reversal, you've closed back in the 1.99 trillion market cap level. This reversal is a daily reversal signal with sheer power. It likely means Microsoft's made a near-term top and will not see more upside. Potentially, you can get a 50% retrace of this. That is usually standard affair. But this type of reversal on volume, even more volume than this traded over here, likely means we've put the top in the second largest company in the world. So what does that mean? If Microsoft is put in a near-term top, that means now there's 2 trillion worth of market cap that is going to subdue the Nasdaq, subdue the markets, and subdue the indices. If we simply look at why Microsoft stopped at that particular level, and we prepped you on that level, you draw a trend line connecting this pivot to these intersection of pivots, boom, you intersected perfectly. Now, to really blow your mind and really see what's really fascinating about technical analysis and reading the charts, you connect a trend line from this high pivot to this high pivot to this pivot. You actually pierced that level, went all the way up 3% above that level, and reversed and closed back under that trend line. It just shows you how powerful trend lines can be, especially when they connect major pivot zones and especially when it accompanies the indices at major resistance points. But being the fact that Microsoft has now given us a sell signal, we can essentially look for more downside and weakness to creep into tech. I'm not this now, anything could go above this level, but we're likely very close to a turning point, at least in Microsoft, based off of this reversal signal. The last time we got a reversal signal was on this pivot over here on way above average volume, and look what subsided. Basically, if we had to put a measuring tool, I believe it was a 17% drop. Look at that, a 17% drop from the low to the high. So an incredible drop. Now, is there the potential for Microsoft to drop that much again? There absolutely is. It could eventually drop all the way back down to the low range of this broadening formation, and it would still be keeping a series of higher lows. So that's kind of the expectations for Microsoft. It certainly will weigh in on the Qs now that potential signal is. The big level I'm watching on the Qs is basically, do we get a weekly close back under this yellow trend line? You see this main pivot connecting all the way to your COVID low down here through this volume chop. And basically we've tagged that level multiple times, even over here, kissed it, and we finally tagged it multiple times, and it looks like on a daily chart we're not being able to get through that level. So the volume on the Qs certainly is starting to pick up. It's so convenient that it's near the highs of the chart at a major resistance point. Notice how you're connecting through these major pivots over here, right down to this level. Really fascinating trend lines. So I do think that the markets, now there was a second sell signal that I got on the markets today. Nvidia, the leading semiconductor. Nvidia is a powerful signal because this stock was also up substantially on the session, just kept surging and surging along, and then the sell pressure started coming in on volume. And it came in right at this resistance level that we gave you. Now, the downside about Nvidia as to why there may be potentially not as convincing as Microsoft is for two reasons. The volume wasn't bigger than the previous rally candle, as opposed to Microsoft it was. So you can see the volume distribution, way bigger on the sell side. However, Nvidia's candle is still very strong. It is a daily topping fill, but I would have preferred to see it fill this technical gap where there was a huge volume of shares traded above average. Usually markets love to take that liquidity, and it would be interesting to see if Nvidia does a full 100% retrace, even a potential pierce of this level, and then reverse. And keep in mind, a lot of the times market makers like to keep the stocks up right as they head into earnings. So Nvidia has yet to report earnings. So I'm not saying that Nvidia can't, surpass this gap and not fill it and just trend lower. But this reversal signal that we got in Nvidia isn't as powerful in Microsoft, but it is showing that there's distribution occurring now at the semis. This is meeting the reversal level. It's showing that there's sellers now lurking here from this massive extension move from 108. And that's a clear profit-taking signal. Basically, any people that bought down here have now made well over 100%, and it's now retracing into a major technical level, as seen on the chart here, connecting your COVID or a 2021 pivot to your pivot high here, and look what you just tagged. So again, Nvidia is not as powerful, but it is showing that the leading semiconductor is starting to slow down, and I would be very skeptical about buying up here. This is now starting to see where sellers starting to emerge in this market. And we certainly saw an AI-based algorithms trigger selling in the SPY today. If I do a little bit of an additional teaching in the markets, basically if you look at the volume trends today, and we're going to just study really where the markets opened. So the markets basically gapped down over here. Notice the volume was heavy in the morning. And then basically the volume candles just started getting bigger and bigger and selling. And then notice the size of the green candles right until we get to about right over, let me just look here, right in the afternoon session here. So notice how this candle, fairly decent sized candle, green candle, bigger than this red candle, bigger than that red candle, but notice the volume changes. This volume on the buy side was so light, as if the market makers were just teasing people in to buy, and then they were unloading into a bigger sell candle. And then same thing over here, volume bars started increasing to the sell side pressure. You did have a big volume surge here. And the fact that the candle actually went positive and then showed that a big amount of sellers started selling into this candle to push it down is actually a little bit negative. But nonetheless, intraday action was really intriguing to watch. That's for sure. If we flip back to the daily chart, where I think we could eventually test is just this low pivot. In the after hours, we did have decent earnings from Disney. Disney actually gapped up in the after hours to all the way to a high, I believe was like 121.95. Let me just put on my after hours prints here just so we can see it. But Disney did fade. We issued the technical short level. So we are short Disney now around the 121 level. But basically Disney has sold off from the highs, and you can see this large green candle, massive move to the upside, big volume surge, and this little red 10-minute candle, way smaller than this green candle, and a huge distribution of shares. This is saying that a massive seller was unloading their Disney position into the strength of this pop. And it just shows you that this size of this candle is like triple the size, smaller, but way more volume. So just be mindful that Disney is being dumped into at this point in time. And I would not be shocked if Disney falls very sharply tomorrow after a potential initial squeeze up. I would not be surprised if Disney sees downside fairly quickly here. because it is extended. I mean, we're talking about Disney trading all the way at the highs around 121 here from an extended move already. That's over almost a, what is that, 84 to about, that's over 60% rally there. So pretty impeccable move, definitely for Disney. But nonetheless, you will start to see sellers emerge. So to sum things up, job number is going to be important. The whole host of earnings is going to be important, like ABBV chart, ABBV. AbbVie's been obliterated, so heading into earnings, it's obviously earnings and the market's pricing it in that it's not going to be a good report. But that being said, it's oversold in the near term, and you're actually coming into some decent levels. You've had some buying pressure reversal candles that shows there are buyers accumulating here. So basically, if the report doesn't come in as half bad, this could actually rally. But there's a big earnings, even Pepsi's a massive, massive company, important forward guidance for the economy, triggered this topping formation, fulfilled the downside. Now you're putting in bearish consolidation right on a key support line. So this looks poised to break lower, to be honest. This is a nasty bear flag. I wish I actually saw this on Pepsi, because if their earnings, if they get a little bit of a pop tomorrow, I'm probably going to short this stock based off of this potential bear flag pattern. You likely see Pepsi break down to this level here, this next support. It could even flush tomorrow. I mean, that would be a big move, but that's certainly what the pattern is showing. You could easily see a 5% drop on Pepsi if they don't report good earnings. I mean, over here they did, but they were at a better support level. Over here they sold off a little bit. But again, this type of pattern is typically bearish, and it does signal a drop is coming. So we'll just have to see how the potential pattern plays out there. AZN's another one. We were shorting this. We took our profits, over a nice little gain there. But AZN's looking weak as well. You've had a little bit of a bounce, so it really is kind of more neutral at this point in time. There are short levels, there are buy levels. But again, PayPal's another one, Duke Energy. There's tons and tons of companies that are reporting tomorrow. But again, all eyes will be on this US dollar and where that finishes, as well as what the job number does to the yield. So that's going to be the market moving event. And based off of these patterns, it's interpreting potentially a better than expected job numbers, which should pop these yields a little bit more. Other than that, I'm going to call this video to an end. I've given you the analysis on Microsoft. I've given you the analysis on Nvidia. We just have to really now wait for the potential market to give us further insights, because when you look at Apple, the biggest company, Apple has not given us a sell signal yet. So until the biggest company does, there's still potentially strength in this market. Even though Apple is so extended, Apple still has not given us that official sell signal yet. So again, there's starting to be parts of the market that creep in and showing tremendous amount of weakness. But other than that, I didn't touch base on natural gas. Natural gas got wrecked today. Oh my goodness. Where were the natural gas bulls today? We needed them, and they were hiding. They were certainly hiding. But intraday action, I mean, this just looks like a liquidation, a mass liquidation. We basically lost that 2-day rally, engulfed it all, had a little bit of a bounce off the lows. You are putting in potential bullish consolidation off this low. But technically speaking, you're still at support. Nothing's really changed in my analysis on natural gas despite this big drop. You're still at technical support. So until proven otherwise, basically, natural gas is still holding this technical level. Let me just erase that for now, just so we can see. But as long as you don't take out this pivot low, natural gas can still have a technical bounce. It's good to see that even with a fierce selling day today, it did not take out this pivot low. So that's super good to see. The key trend line that I was watching today was this level, the retrace basically to the breakout zone over here. You still technically held it. So short-term positive, even in a down session. Natural gas is still completely oversold. I'm still long. But again, if you start to put in bearish consolidation, that leaves natural gas more vulnerable to going to the downside. UNG is basically the same chart. I still did have that max downside on UNG calculated. Again, you're still at support. Notice how this channel is keeping you in check, but it's acting very, very weak. You now have another gap to the upside. So many gaps to the upside that I do think eventually will get filled, but you never know how much this downtrend can go down. Certainly commodities like to overshoot. On that note, I'm going to bid you farewell. Stay tuned for plenty of market action tomorrow. Tune into our @TC Live channel. View our website for our trading alerts at tradingcapital.ca, and we'll be sure to continue to try to put out educational content and give you the market signals that we are seeing. Take care, everybody, and we'll see you on the charts tomorrow.